and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. And no, we're not going to talk about the tax cuts announced by the FM Nirmala Sitharaman on Friday, partly because they've been discussed extensively, both in print and electronic media, particularly in the business channels like ET Now. Instead, we're going to look at another development, also on Friday, that has somehow slipped below the radar in all the excitement over the direct tax concessions. We're going to look at the just concluded meeting of the GST Council. Granted, the direct tax cuts have stolen the thunder from under the announcements of the GST Council. But was the Council's meeting in Goa, the 37th to date, a missed opportunity to somehow do something more concrete to support an ailing economy? Please don't get me wrong, the reduction in corporate taxes was long overdue and hopefully will revive animal spirits and spur corporates into investing. But if we believe that the slowdown, as most of us do, is because of lack of demand, would the same giveaways by way of lower GST have revived demand more effectively and, more importantly, more immediately? That's the key question, along with many others, that I am posing to my panel of experts. Najib Shah, former Chairman, Central Board of Indirect Taxes; V.S. Krishnan, former member CBIT, presently National Leader Tax and Economic Policy EY; and Pratik Jain, Partner and National Leader Indirect Tax PwC. Let me start by asking each of you in turn the question that I posed right in the beginning. If we believe the slowdown is because of lack of demand, would the same giveaways by way of lower GST have helped revive demand more effectively and more immediately? Because unlike a cut in direct taxes, a reduction in GST has to be passed on to the consumers. Let me start with you, Najib.
I straight away agree with you, Mythili. I do agree with you because these cuts in the direct taxes would take time to translate into actual investments and job creation, which is the hope of the government. And just to put things again in perspective, the corporation tax budget estimate was 7,66,000 crores. And after this giveaway, there's no way they're going to meet the targets. So I think, which means what this translates is that there's going to be a huge burden on GST itself to try and raise resources and revenues for government. Had they reduced some taxes on the GST front, the CGST rate, SGST rate, perhaps there could have been immediate spur of demand, more so going into the festive season. I do believe, however, that the issues facing the auto sector is much more than really reduction in rates, and there are structural issues which need to be addressed, which ought to have been also addressed rather than mere reduction in rates of direct taxes. But having said that, I agree with you. The reduction in rates of CGST would have had a far more immediate impact in spurring demand rather than these reductions, which have only made the market euphoric, and this amorphous India Inc. also go into ecstasy.
Absolutely. Krishnan, would you agree with Najib? I'm sure you do, actually, not only because you were former colleagues, but also because if you look at the fact that, particularly if you look at the concessions given to HNIs, their propensity to consume is far less than that of those at the bottom of the pyramid, who would have benefited had we had GST giveaways of the same order. Would you agree that GST giveaways would have been more effective in reviving demand in the economy?
Mythili, I think this is a problem of a slowdown in household consumption. And Sajid had written an interesting piece that actually what's happened is that the household debt to GDP ratio has been rising. So consumer demand has been based on a lot of loans from the banking sector. So this is more of I think an expectation problem. I think unless you put more money into the hands of the consumers in terms of wage increase and maybe some tax deductions on the personal income tax front. The main problem is one of demand, and some of the announcements that have taken place are more on the supply side. And I think these measures will not really help demand in the short term, but may help in the medium term of bringing investments into India. So I think there is an expectation and a sentiment problem on the household consumption. And a lot of consumers are actually building up their precautionary savings, which is reflected in higher outflows into mutual funds and other schemes. So I think this is a more serious structural issue which cannot be solved by merely some rate cuts.
Pratik, let me toss the same question to you. Would a cut in GST, if not even of the same order, would have been more effective in reviving demand? Pratik?
Yeah, so I mean, I think I agree with the fact that a GST cut would be more immediate and the impact would be seen immediately. But there are 2-3 points I'd like to make. One is that, look, in GST, central government has agreed to compensate the state with 14%, assuming 14% growth, and the compensation cess that they're collecting is clearly not enough. They're under pressure. Second point is that GST rates today are lesser than the pre-GST rates, on most of the products, if not all. I would presume most of the products. Okay. The third is that any decision on GST that you take, you have to involve all the states. So the decision making with GST is all that more difficult. Therefore, any decision on GST is difficult. Fitment committee had also recommended that GST rate cut should not happen before a proper consultation takes place. So it's not an easy decision.
Sure. I hope you're right on the hopes of investment, Prateek. But Najib, Prateek's pointed to the fact that any change in GST really needs the consent of the entire council. And as we've seen in the past, merely because the same party is in power in a majority of the states as we have now, as at the centre, there is no guarantee whatsoever that they will fall in line with the wishes of the union government. And thank God for that, because we are a federal republic and state governments, regardless of which party they belong to, realize that they are ultimately answerable to their own electorates. And this makes it much more difficult for the union government to tweak GST rates. So going forward, will we see the union government resort increasingly to action on direct taxes where they have complete sway, and also to things like cesses and surcharges where they don't need the states to go along and better still don't need to share it with the states? Najib?
Yeah, I suppose like Prateek did mention and like you are mentioning, it's an easier option which has been definitely adopted. But having said that, please remember that every time the states do not agree for any reduction in rates, we are also talking of a demand getting impacted in their respective states to that extent. So I do believe that the GST Council has been extremely pragmatic in terms of ensuring that the decisions are taken after due consultation. And going forward, that will continue to happen. And this is wonderful to have these checks and balances within the council itself. Yes, every reduction in rate would increase the pressure on the centre to compensate for the lesser revenues being collected by the states itself. So direct taxes reduction is an easier option, but ultimately we would like to see investment being spurred. We would like to see demand getting spurred and revenues getting spurred, because please remember again, the deficits are increasing, and I think we're going to touch 4 by the end of this year, which is not a great thing to happen.
Oh yes, certainly it is not a desirable situation at all. But Krishnan, in fact, the tax giveaways are expected to cost up to 1,45,000 crores. Maybe a little less because the reduction in effective tax is a little less than the headlines would suggest. But this will impact the transfer to the states. So will states be less willing to give up their demand for compensation? At the council meet on Friday, we saw many states asking for an extension of the period for compensation. So will that gather momentum now?
Yeah, I think the states are making the point that, and the Finance Commission made this point that what we are witnessing now, as somebody called, is a growth recession. So that in this scenario, can the government really sort of give guarantee 14%? So I think that's the point. I mean, should they settle for a little less? And also whether the cesses need to cover a wider, because cesses are not able to meet now the compensation demands, I think the last 2 months. But what I think the government will do is that it will try to minimize the fiscal damage that has been caused by having a more aggressive disinvestment policy. The target is 1 lakh crores. I think they may ramp it up. A more aggressive disinvestment and mopping up non-tax revenue, for example, spectrum sale and all that. So the idea is then you have the RBI's 58,000 crores, which will also help. I think the attempt would be not to reach 4, but maybe just be around there. So I think the government is committed to fiscal probity, and I think they will do something to minimize the damage.
But Prateek, before the direct tax announcement stole the limelight from the GST Council, there was a huge build-up of expectations, particularly regarding certain sectors, auto, biscuits, hotels and so on. Of course, we saw industry lobbies also get into the act. In that sense, was the final outcome somewhat disappointing, especially if we look up at the build-up before? How would you assess the outcome of Friday's meet, Pratik?
No, not at all. I'm not disappointed at all. I think there are some major decisions which have taken place in this council meeting. Of course, the automobile and let's say biscuits, those sectors will perhaps feel a little disappointed because of the built-up of the expectation. But to be fair to the government never said that they're going to reduce it. I mean, it was a fitment committee clearly sort of recommended, and that was a public news that they have not recommended a rate cut. So, of course, some of this expectation do get built up. But 2-3 things I want to highlight. One is clearly for the hotel sector, above 7,500, they've reduced the rate from 28 to 18. For outdoor catering services, the rate has gone down from 18 to 5, except for those 5-star kind of catering. For railway sector, they have corrected the inverted duty structure problem by increasing the rate from 5 to 12. So I think there's some major changes, tinkering has happened on the rate side, which is very good. Also, they have come up with some clarifications, right? For FMCG sector, there's a big issue whether post-sale discounts would be liable to GST or not. There was the earlier circular which was issued, they have withdrawn that circular. For ITS sector, they have withdrawn the earlier circular which was creating a problem. So I think all of that does indicate to me, and of course there is simplification in the compliances that they've introduced. The October return, which was coming from October, has been now deferred to April next year. That shows that at least government is listening, right? They're listening to the problems of industry and they're coming back. So I'm very happy with the outcome of the GST Council yesterday.
Okay, so you're not disappointed in the GST Council meets. That's good to hear. But I'm afraid it's now time for us to slip into a very short break. After we come back, we'll ask both Najib and Krishnan what was their reaction to the GST Council's outcome. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with 3 tax experts on the outcome of the GST Council meet, a development that somehow kind of was eclipsed by the announcements we saw on the direct tax front. Najib, I wanted your reaction to the GST Council outcome. Are you disappointed, or do you think enough progress was made on the plumbing, which is very important, the nuts and bolts of GST?
I think a lot of progress was made. I think the expectations of auto and biscuits were completely misplaced.
Welcome back. You're watching Macros with Mythili, and I'm in discussion with 3 tax experts on the outcome of the GST Council meet, a development that somehow kind of was eclipsed by the announcements we saw on the direct tax front. Najib, I wanted your reaction to the GST Council outcome. Are you disappointed, or do you think enough progress was made on the plumbing, which is very important, the nuts and bolts of GST?
I think a lot of progress was made. I think the expectations of auto and biscuits were completely misplaced. And I'm very happy that it did not succumb to that pressure being built up of reducing rates in both those sectors. I think a lot of clarifications have been issued which should go a long way in ultimately reducing disputes. So I do believe that they have done well. Tourism sector has been particularly been focused upon. That has been good. So I think the clarifications issued should help in the compliance becoming easier. I'm disappointed only to the limited extent of the simplified return date being again postponed. I do not know whether this is because again the technology is not up to speed, but I do hope that is brought in sooner rather than later, because that is required. Annual returns being deferred and being given an option is not a great thing, simply because those are very important instruments in the hand of audit to ensure compliance has been done. So these are things which I thought could have been addressed differently. But having said that, broadly the GST Council has done a splendid job.
Okay, so pat on the back from the GST Council. Krishnan, what is your take? Do you agree with Najib that auto, biscuits, etc. really didn't have a case, and they were just using the opportunity to somehow lobby and get a concession, because who doesn't want a tax concession?
Yeah, Mythili, I think now the picture is very clear that at least for this year, you can't expect any rate cut on the big revenue items like cement and auto and all that. But what they have done, which is very important, is this announcement of automation of refunds. The refunds is a big problem, and somehow this never got automated in the first round. I think it's very important that the refund system be made automatic. That will really help businesses, and that announcement has been made. And I think in postponing the implementation of the return, as Najib says, I think it is also a technology issue, and they don't want to get into again problems of compliance, diverting attention from the more important tasks of actually improving something like your invoice matching, improving the compliance. Now I think you are going to see a lot of anti-avoidance measures now that they have made the big announcements. Now the government can say, look, we've got to tighten our anti-compliance provisions. We will do all that. The rates are low. So it's time that compliance improves. So that I think will be the big thrust, and refund automation is going to be extremely important. But one point, Mythili, I think, in the larger context, people always visualize the GST as an indirect tax, which will cut things and you can boost consumption. But I think the indirect tax rate can also be, GST can be an instrument for factor reforms in the factor markets. Because today the main problem is, why are our exports not doing well? Why is Vietnam doing better? It's because their productivity levels are high. Our factor markets have not been reformed. And one important area is, I think, your industrial tariffs. One of the reasons for Indian exports not being competitive is very high industrial tariffs, which are actually subsidizing consumer tariffs. Now, if you can bring electricity at some point, it will do into the GST. I have said this on your program number of occasions. It will do a lot for Make in India.
I do hope you're right on that, Krishnan, because we desperately need to improve our competitiveness. But Pratik, as far as the procedural aspects are concerned, did the GST Council make enough progress on that, on e-way bills? And do you think that the pressure on revenues will somehow induce the Council to get in sectors that are now completely outside GST? Pratik?
Yeah, so on procedure front, we have already spoken about the relaxation which has been given. I think October to April next year is a good one. Annual returns for businesses below 2 crores of revenue, they have made it optional because annual return is really a very complicated document, and they have also mentioned that they would try and sort of simplify that as the time goes. As far as e-way bill, etc. is concerned, I think it's more or less running smoothly. I think now the government is trying to implement e-invoicing. I did not see enough on that. From January, they were planning to start on a voluntary basis. So at some level, the e-invoicing and e-way bill integration would happen, and maybe in the next GST Council meeting there would be a deliberation on that. So I think procedural front, a lot of stuff has happened, but one very sort of important sort of thing which I noticed was there is a big concern of the government about the fake invoices and the fake credits that people are claiming, and there's specific mention in the press release that they would come up with mechanism to ensure that what they call is the risky taxpayers. And how will they define risky taxpayers? We'll have to see. The risky taxpayers cannot pass on the credit, and can't use the fake invoices. And they've also said that if you're not reporting your GST filings, then there might be some restrictions on credits as well. Some of these things are it's very important for the government to implement it carefully, because you don't want the larger businesses to suffer.
I'm glad you highlighted, Pradeep, because normally these are just completely ignored in media, because these are the things that matter, but somehow don't get the attention that they deserve. But Najib, post the announcements that we saw on the direct tax front, has the skew between direct and indirect taxes worsened? Have we made our tax structure much more regressive? Because indirect taxes, as we all know, tend to be regressive because everyone down from the panwala to the high net worth individual has to pay, unlike direct taxes where the tax incidence on the panwala can be curtailed, can be tailored to make sure that he pays less than the HNI. So have we in this process lost out a bit on the equity front, Najib?
Yes, I do believe we have lost out on the equity front. Because like we were discussing, there's a lot more pressure now on the indirect tax front to make up, and hopefully this investment will reduce that burden on GST itself. But having said that, we need to ultimately ensure better compliance, and would mean more aggressive anti-evasion measures, which will again bring in its wake its own set of problems and challenges for the administrators and for the tax assessees. And the way forward really is to expand the tax base by which I mean not just the number of assessees, but to bring in more commodities. Real estate has now gone completely in the background. Petroleum products have gone completely in the background. So these are, which need to be brought into the GST net really as that's the way forward to make up for all these other issues.
Krishan, one of the good things that has happened post yesterday's announcements, Friday's announcements really is that the direct tax has now become simpler. If you don't take exemptions, you just have one rate. So in many ways it is easier, simpler, more transparent. What will it take to get GST to that level where it becomes much easier than the rather complex multiplicity of rates, exemptions? So what will it take for GST to get where direct tax seems to be going now?
I think, Mythili, the late Finance Minister, Mr. Jaitley, had, laid out the vision on the rate structure. He said the way out is to have a 5%, merge the 18 to 12 into 16%, knock out the 28%, and have a 40% without cesses. Now, broadly, I mean, the Chairman Finance Commission also in his presentation made the case for fewer rates. But the states are still apprehensive about these changes. So I think this kind of a revenue pessimism is probably coming in the way of these a more simpler structure, because there are interests. As you know, it was that 14% compensation promise that brought the states on board for implementation of GST. But something more interesting has also happened, which I think is that two things are happening. A greater coordination between the income tax and the direct and the indirect taxes on compliance is taking place, which is very, very good, both sitting near each other in the North Block. And for example, the income tax return also seeks information on GST turnover. And they are also trying to link up the refund mechanism under GST with Aadhaar. As Pratik mentioned, there's been a lot of cases of fake invoices and of IGST credit, where you have IGST credits being fraudulently used. So trying to bring in Aadhaar number linkages, which they have already done on the direct tax side. So you can use this Aadhaar to weed out all these.
So Pratik, what should the GST Council focus on in the coming months? Getting the sectors like electricity, as Krishan mentioned, getting them into the tax net?
Yes, so definitely I think there is a case for electricity to be brought in. I think as far as petroleum products are concerned, I think it's a long haul. It's not going to be easy. So maybe petrol, diesel, other passenger fuels, they can don't focus on that right now because consensus building will take time. Maybe start with ATF and natural gas. Look at the anti-profiteering measures, come up with guidelines. That's a big problem the industry is facing. But most important to my mind, and forget about the other part of simplification, I think a lot of work has already happened and I'm sure that it will continue to happen. The government needs to focus very seriously on tax administration. I feel that the kind of data which the tax officers have got now, they don't know how to use that data. They're left, right and center notices issued to people. This return is not getting reconciled with this. This is not happening. They don't know. I think they also need to maybe focus on creating sector-specific bodies or tax officers, a group of tax officers who will deal with, let's say, oil and gas separately and power separately and construction separately, because these are very, very nuanced sectors. So focus on tax administration for next year or so. Of course, look at the large structural changes that you need to work on and build consensus.
Yes, of course, Pratik, technology will be of major help. But Najib, if I were to turn to a related issue, the issue of compensation, the 15th Finance Commission met with the GST Council and reportedly sought its views on whether the current revenue assumption of 14% growth will be the yardstick for compensation from the centre. Was this unrealistically high? Was the Finance Commission's question, given the shrinking of the divisible pool? But do you see some irony in this? On the one hand, the size of the tax kitty or the divisible pool that has to be shared with the states is coming down thanks to giveaway by the union government. On the other hand, the Finance Commission, whose members, mind you, are all appointed by the union government, seems to be using this as a reason to tell states to tone down their demand for compensation. Is there some irony in this, Najib?
Very ironical, but having said that, I think at the time when this 14% was agreed, it was generally believed that it was unduly high. and done more as part of this grand bargain to get everybody on board. Because we did believe that very few states really had this 14% growth, which they are now demanding as the basis for giving them the compensation. So I guess it is ironical, but having said that, it is good that at least this issue has been raised now, because how many states are really growing at 14% for them to keep demanding this sort of compensation? And ultimately, in the GST going forward, the states have to take some part of the burden too, which is now almost entirely on the centre.
True, actually it is a union of states, with the centre or the union really government being only the first amongst equals. But Krishnan, the asking rate now for GST collections has gone up quite dramatically. It was roughly 1.17 lakh crores every month to achieve the target for the year, even earlier before these tax concessions. And now if we add the giveaways on direct tax front, the pressure, as Najib has said, is bound to increase on the GST tax front. Will we really be able to deliver? Will GST be able to deliver?
I think Mythili, we're going. I mean, there will be a shortfall on the GST side, because we are seeing this slowdown in the economy. So I think some degree of shortfall will be there. But this period should be used, in my view, to strengthen for the states also, which the chairman of the Finance Commission mentioned, to tighten their tax administration. Mythili, the states, and we have had some interaction with the states, the service tax side, the states are weak, because they are not still familiar with the nuances of services taxation. So they require some hand-holding there, and that is the reason where some capacity building in the states is absolutely essential. So some states are, they are ahead, some states are not. So state tax administration capacities would need to be built, and that's very, very important. And of course, better coordination between both the direct and the indirect taxes, and measures for automating refund, linking up refunds with the Aadhaar. All this will help in improving compliance. But compliance can only take revenues up to a particular level. If the economy is not doing well, you can't expect.
Taxes cannot be seen in isolation away from the growth of the economy. But I'm afraid we've run out of time completely, so I'll have to end this discussion now. Friday's announcements on the direct tax front will hopefully be followed by adoption of a direct tax code that will make life simpler for ordinary individuals like all of us. And with some luck and perseverance, we'll soon have a simpler and more transparent system on the indirect tax front as well. Because remember, unlike direct taxes, indirect taxes affect every single Indian, rich or poor. Thank you, Najib, Krishnan and Prateek, for joining me in this excellent discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.